Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. Asian markets drift lower for the second straight day as investors weigh the apparent lack of progress in trade talks and the unrest in Hong Kong. The US Senate passes a bill unanimously supporting protesters in Hong Kong and warning China against violent suppression. The Reserve Bank of India finds underreporting of bad loans for Yes Bank to the tune of 3,277 crore rupees in the financial year ending March 2019. And Reliance Jio says it will appropriately increase tariffs next month, a day after Bharti Airtel and Vodafone Idea too announced a hike in tariffs. And finally, oil prices fall the most in 7 weeks after a forecast of rising US supplies and stalling of trade talks. Now, it was a mixed day of trade on Wall Street. The S&P 500 and the Dow ended lower owing to disappointing earnings and a lack of progress in trade talks. The Nasdaq eked out marginal gains, though, on the back of a tech rally and ended at a record high. Ritika Gupta of Bloomberg News tells you exactly what happened in that trading session.
U.S. stocks ended Tuesday mixed as investors weighed retail results and new developments in the U.S.-China trade saga. Meanwhile, the Treasury's got a bid with the yield on the 10-year dipping below 1.8%. Now, the S&P 500 closed just fractionally lower, and that snapped a 5-day winning streak at record highs. The Dow Industrial closed almost 0.4% lower, but the Nasdaq actually gained 0.2%, bringing it to a fresh record high, led by Facebook, Broadcom, and Tesla. Now, after disappointing retail results in the morning, stocks erased some of those losses after reports that U.S. and Chinese negotiators may link the size of tariff rollbacks to terms set during talks in May. Now, if we look at the S&P 500 sector composition, we can see the risk-off tone as 7 out of the 11 sectors closed in the red. The gainers included healthcare, IT, the financial sector, whereas at the bottom were telecoms, energy, and the retailers. And within telecoms, AT&T was a big drag after it was downgraded to sell from neutral. And within energy, it was those oil companies having a bad day, falling in sympathy with oil, which was off 3% during the session. Marathon Petroleum, Occidental Petroleum, and Valero Energy, some of the big laggards there. Now, I mentioned those poor retail earnings, which dragged on the S&P 500 and raised concerns about the health of the American consumer. And of course, it was Kohl's that was the biggest laggard. It plunged 19.5% after it cut its earnings outlook for the second time this year. We also had poor earnings from Home Depot today, and both of these are dragging down some of the other names in the sector like Macy's and Nordstrom. But there was one bright spot within retail, and that was TJ Maxx after it reported a solid third quarter. And that's your Tuesday U.S. markets wrap. I'm Ritika Gupta in New York with Bloomberg TV.
All right, let's turn to the Asia-Pacific region now. Rosalind Chin is joining us live from the Bloomberg studios in Hong Kong. Seems like a second straight day of cuts in Asia. Rosalind, how's it looking? What's the closer look?
Plenty of things going on here in Asia, none of them, though, helping the markets to move into the green. We've got the MSCI Asia Pacific index losing about 0.2%. And really, largely speaking, most of the boards here in Asia are actually trading in negative territory at this point in the session. So, we've got this US-China trade situation going on. We are hearing that they may be using the failed talks, the agreement, the possible agreement that could have happened in May as a blueprint for the tariff rollbacks for this current discussion that they're having on the trade deal. However, there is a potential complication after the U.S. Senate passed legislation supporting Hong Kong protesters. China has, in the last half hour or so, reiterated unspecified retaliation if the U.S. enacts the bill. But of course, the House does need a fresh vote before it does, in fact, go to President Donald Trump. So there's a little bit more, a few more steps there to be taken before that actually bill can be enacted. However, China is on watch for that. Right now, we've got the Hang Seng Index losing about 0.7%, having just opened. in the red. Hong Kong government saying that the bill would have a negative impact on U.S. interests. In China, the Shanghai Composite is losing about 1/5 of 1%. CSI 300 losing 0.15%. We've got the one-year prime rate cut to 4.15% versus 4.2% in the previous month. That, of course, a sign of China again acting to help support its economy there, making loans a little bit cheaper there. The 5-year loan prime rate is at 4.8% versus 4.85% in the prior month. Japan data on Wednesday showing a tumble in exports, dropping for an 11th straight month. The trade war, of course, continuing to really weigh on that. The value of shipments falling 9.2% in October from a year ago. And of course, that is now the longest streak of declines since 2016. That's against economists' forecast for a 7.5% drop in overseas shipments out of Japan. The Kospi right now is losing about 0.75 of 1%. PPI again, looking pretty gloomy for the month of October, and that, of course, is expected to accelerate a correction in the Kospi. The Nikkei down by 0.6%, and the Topix down by 0.5 of 1%. And finally, Australia also in the red, down by more than 1%, 1.25% at this point in the session. Financial stocks really trading lower today. That's after Westpac Banking was accused of financial crimes. The biggest breach of money laundering and terrorism financing laws in Australian history, according to a court filing, including failing to detect payments that may have been used to facilitate child exploitation. So financial stocks in Australia, they're taking a bit of a hit. Westpac down by 2.5%, and the other main financial institutions, NAB, Commonwealth, and NAZ, all losing more than 1.5%. Back to you.
Thanks so much for that. I forgot to say good morning. All right, meanwhile, let's turn to something that Rosalind mentioned. She spoke about the vote. The U.S. Senate unanimously passed a bill to support the protesters in Hong Kong and warn China against a violent suppression of demonstrations. Jody Schneider of Bloomberg News gets you the implications of the passage of that bill.
This is important in the whole Hong Kong saga, as this is a bill that pro-democracy advocates and the protesters have supported, have called for passage. Joshua Wong went to Washington and testified in support of this bill. So this is important for them. The bill, though now passed by the House and Senate, still has a few more hurdles before it can get to President Trump's desk. The bills were slightly different. Congress has to pass the same piece of legislation, so they'll need to reconcile these versions and come up with one that can then be passed by both chambers again and then get to President Trump's desk. We haven't heard from President Trump specifically on this, so we don't know whether he would pass it, but because there was bipartisan support, overwhelming bipartisan support in both chambers, even if he were to veto it, they may be able to override that veto. Also, we have heard from China on the bill in recent weeks. They said that the U.S. should basically bow out and not interfere in Hong Kong's affairs. And they said they threatened countermeasures if this bill was to become law.
So, Jody, what's the latest with the standoff at Hong Kong Polytechnic? What's happening there?
Yeah, so we've seen, Kathleen, more protesters, more students come out. Carrie Lam tells us that there have been more than 300 students that have come out of there. We saw some arrests last night. Some students some protesters tried to escape, and they were immediately arrested. It is still surrounded by police. We are not sure how many people are left there, but they've been there for days, and so we just don't know yet how this is going to end, but they are surrounded by police. It's very unlikely they could get out of there except by leaving, being arrested and leaving the campus that way. Again, this was the most violent day there. The most chaotic clashes happened on Monday. The police told us there were more than 1,400 volleys of tear gas fired, and almost that many rubber bullets as well. So it was a very chaotic day on Monday with fires, cars being set on fire, those continuing volleys of tear gas. Less so yesterday as more people left, but the police are still surrounding that campus.
Those visuals, they're coming from Hong Kong. Let's turn to the latest from the US-China trade negotiations. Sources tell Bloomberg that the deal between the two countries that fell apart 6 months ago is now being used as a benchmark to decide how much tariffs should be rolled back as part of any Phase 1 agreement. Tom McKenzie of Bloomberg News gets you the latest.
This is fresh detail then on what is being discussed between the US and Chinese sides as we lead up to potentially the first phase of what the US would like to see as a comprehensive trade deal. As you say, now they're using that agreement that they had come close to signing off on in May as a template, as a benchmark to decide to what extent and how quickly they are prepared, the US, to roll back tariffs that they've imposed on Chinese goods. So it's going to come down to essentially how quickly the Chinese side is prepared to implement some of those initial agreements in the May deal, and depending on that, then the US will roll back tariffs. So that's the broad brush of what we're hearing at this point. The details around the tariffs are this. China has said and demanded that it wants the tariffs that were imposed in September of this year removed immediately if they get a Phase 1 deal. They also want the threatened tariffs, which have been threatened for December the 15th later this year, to be taken off the table completely as well. And the Chinese are saying they want the $250 billion worth of tariffs that were imposed in 2018 to be gradually pulled back as well. So those things are now being debated by the US side, and also they are discussing to what extent and in terms of percentages they remove those tariffs. We know now that US officials are a little bit more less reluctant to roll back some of those initial $250 billion worth of tariffs. They had wanted to keep those, some of the US officials, as something of an enforcement mechanism. Now they've come around to the idea that they can gradually move those back. But again, it comes down to the percentages, everything from 35%, which is being pitched by Lighthizer, to 60%. That's been debated by the US officials. Then they have to get agreement with the Chinese side, of course. But for Beijing's perspective, getting some relief in terms of the tariffs is absolutely essential if they're going to sign off on this Phase 1 deal. Of course, all the analysts are saying this is essentially the easy part of these trade negotiations. It's Phase 2 that is going to be incredibly complicated. Trump says he wants that to start immediately after Phase 1, but we still don't have a location or a time frame for when Phase 1 will be signed. We hear the state media here saying that President Xi Jinping is not going to be travelling outside of China before the end of the year, which of course raises the question as to how the two presidents can sit down and sign off on Phase 1. But yes, more details in terms of how they're looking at the tariff rollback, both the US and Chinese sides.
Tom, the U.S. Senate is back to be able to support Hong Kong's pro-democracy protesters. Can that impact the trade talks?
Well, it can. I mean, first of all, there, of course, has been a market response. Arguably, there shouldn't be any surprise to this. Everything was pointing in the direction that the Senate would sign off on their bill after the House signed off on theirs. Of course, now it has to be passed by both chambers and then go back to President Trump. I don't think the Chinese will be surprised that this is happening, even if it is an incredibly sensitive issue for them. Territorial integrity is right at the core in terms of Chinese sensitivity for the Communist Party. So they have said, of course, they would hit back with strong countermeasures if this bill is implemented. What that means, whether or not that's down to Trump signing off on it, then they retaliate. That is a question, of course. We'll be listening out for any commentary from Chinese officials on this. But certainly it will likely make these discussions or overshadow these discussions. But there is so much pressure on both the US and Chinese sides to make movement in terms of the trade deal that it would be surprised if it completely derails it. But it's certainly another complexity in the relationship. And you heard from Mike Pence saying, essentially, if Beijing was to go in hard on these protesters and use violence against these protesters as demonstrators in Hong Kong, then politically it would be very, very difficult for the US to sign off on Trade 1, which is probably why you're seeing the Chinese holding back, for now at least, in terms of more aggressive intervention in Hong Kong.
All right, we'll bring you more updates as we get them. For now, let's turn to the other headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
Japanese exports fell for an 11th straight month in October. This as the U.S.-China trade war continues to drag on global demand. Now, the value of overseas shipments fell more than 9% from a year ago, and that extends a run of declines dating back to 2016. Economists had been expecting a decline of 7.5%. The drop is the largest in more than 3 years. To the UK now, Prime Minister Boris Johnson and opposition leader Jeremy Corbyn repeatedly clashed over policy in their first televised election debate. Johnson promised voters that the years of austerity are over and that he would massively raise government spending if the Conservatives win next month's poll. Corbyn said Britain's health service would only be safe under a Labour administration. Meanwhile, the U.S. has walked out of military talks with South Korea. Seoul balked, I should say, at President Trump's demand that it pay 5 times more for having American troops stationed there. The foreign ministry says it had expected to discuss costs that were in an acceptable range for both sides. The dispute has raised questions about the stability of one of America's closest alliances. And finally, New York Fed President John Williams says he's more attentive to the possibility that the economic outlook will worsen rather than improve. However, he still reinforced the message of confidence that the U.S. economy and monetary policy are in a, quote, good place. Williams told a Washington conference that the domestic picture is strong, but being clouded by global factors. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the Indian markets. Agam Vakil is here to set you up for the day's trade and all that's happening in the futures and options space. Agam, good morning.
Good morning.
How's it looking at the start today?
Well, Alex, we are looking at some amount of pressure on the SGX Nifty, but the heavier Reliance Industries is going to be in focus. So, I'll wonder whether or not we will eventually see as much weakness as the SGX Nifty is indicating. That said, Reliance Industries is just one other heavyweight in the index. But let's move on and talk about how things have panned out yesterday. And we did see about 0.5% gain for the benchmarks. We also saw mid-cap and the small-cap indices advance by around 0.25%, a little over that for the small cap index. The banking indices also gained, and we saw the PSU banking index specifically up as much as 4%. But coming down to, well, all the stocks that are being listed abroad, specifically America and perhaps some of those across the globe, we have not too much to speak for otherwise. Of course, Tata Motors has, along with Vedanta, declining by around 1 to 2%, and among the other set of those stocks are listed abroad. We don't have as much in terms of ADRs, but in the Reliance Industries, GDR is up as much as 7%, which is why I did have to mention, Reliance Industries. So we'll be watching out for that. Of course, there's a lot of reasons related to this. Fund flows, FIs have sold to the tune of 915, and this is after a few days that we've actually seen a net sell figure. On the other hand, DI is buying to the tune of around 263 odd crores on a net basis. Moving on to, well, your contributors, we have Reliance Industries, Bharti Airtel, Axis Bank, providing some amount of support. On the other hand, we do have TCS, HDFC, and ICICI Bank bearing down on the indices. But coming down to futures and options, the Nifty futures, again, really didn't see too much movement, and the Nifty banking futures, they did see about another 6.5% added in open interest. It was a strong day of trade, and as I was pointing out, it was essentially a day of trade where public sector banks stood out and gained quite substantially. That said, let's talk about your levels, and on the Nifty, what has really changed now is until yesterday, we had maximum open interest in the 11,600. And now we have competition and around the 11,800, 11,900 puts as well, which have max OI. This certainly signifies that we're unlikely, and it is going to be very hard for the index to break at least 11,800 in the near term. This is a very, very important level now, especially given the next couple of weeks and the expiry. And on the higher end, of course, it's the 12,000 that remains as the one with the maximum open interest. So expecting a range-bound trade over the next couple of days, but you never know how things may shape up. For now, as I was suggesting, a little more writing coming around the 11,900 put. But let's move on and talk about other factors here. The VIX came off by as much as 2.2%. The Nifty put-call ratio as well, edging higher to around 1.45. And among other factors, we're also watching out stocks, which will be in focus. Of course, besides Reliance Industries, we're keeping an eye on Castrol India, Tata Elxsi. Tata Elxsi saw a lot of strength yesterday. Longs building up there, Muthoot Finance along with Canara Bank as well. And in terms of those stocks which saw unwinding, let's pull up that list. We have Glenmark Pharma, a significant amount of unwinding, longs unwinding coming through, but this is after 2 straight days of heavy gains. And Power Grid and Just Dial, among others. Just Dial, of course, is seeing about a short covering after moving well below the mark of 520, and now back above the mark of 560. So, well, Alex, once again, keeping an eye on this, and of course, Reliance Industries, the big one.
By the way, some of the viewers have queries on FNO. I said that you do a show at 10 o'clock, and they're more than welcome to ask you that.
Absolutely.
Thanks so much for that, Agam.
Yeah.
All right, let's turn to Yes Bank, which is going to be in focus today. It has once again underreported its exposure to bad loans. The RBI has found a 41% divergence in the gross NPA reported by the bank in the financial year ended March 2019, as against regulatory checks. Vishwanath Nair reports.
Well, it's happened again with Yes Bank. The Reserve Bank of India has found another asset quality divergence for the financial year ended March 2019. Now, according to what the Reserve Bank of India has found in Yes Bank's numbers, about 3,277 crore worth of gross NPAs were not disclosed by the bank for that financial year. And as far as provisioning goes, about 978 crore worth of provisioning is still pending. Now, remember that this happened on the 31st of March 2019, and since then a lot of time has passed. According to the bank, out of this 3,277 crore, about 1,200 crore has already been downgraded to the NPA category, and of that 978 crore, they've made certain provisions. The bank has also said that it is carrying about 2,100 crore worth of standard asset exposure provisioning, which can be used to soften the blow of this asset quality divergence. Apart from this, of course, the bank has also said that it is in the process of convening a meeting of its board of directors who will finalize the capital raising plan that the bank had announced last month, about $1.2 billion worth of binding offer that came from an investor. Aside from this, of course, the bank has also given a specific notification that it stands irrevocably committed to ensure the highest standards of accounting and governance transparency. Of course, this is a safe harbor statement, something that the banks has to say. But remember that Yes Bank has been going through considerable period of asset quality issues. The first such asset quality divergence was found in FY16 when the RBI found loans worth about 4,000 crore were not disclosed at NPA. Later in FY17, that number increased to 6,355 crore. In FY18, the bank said that the RBI found no divergence, for which it got some feedback from the RBI saying that it should not have disclosed that information to the stock exchange unless it were to disclose the entire letter that the RBI sent to the bank, because the RBI had, of course, found other issues with the way the bank was functioning. The FY19 asset quality divergence was found during a transitional period in the bank's history. This was the period where Rana Kapoor, the founder and then MD and CEO of the bank, had stepped down, while Ravneet Gill was going to take over on the 1st of March, as well as some issues with respect to existing asset quality problems which the Reserve Bank of India has found in the bank's financials. Of course, since then, Ravneet Gill has been trying to ensure that the bank's asset quality situation becomes more stable and its capital position becomes stronger, for which it is raising that capital. So now it will be important for Ravneet Gill to ensure that the investors do not take this divergence as a very negative on the bank's financials, and ensures that the capital raising plan progresses and is completed by the end of the year as the bank had promised.
All right, so we've already spoken about a couple of stocks that will be in focus today. Somit Sarkar is to tell you about the other stocks in news. Good morning, Somit. What's on your list?
Good morning, Alex. I'll start off with Siemens. Came out with Q4 earnings and the results were below estimates. The revenues were aided by the iron power and the smart infra segments, while the mobility segment reported a weak set of numbers. The net profit was boosted on account of higher other income, while margins were impacted due to higher raw material and project setup cost. In other stocks to watch, Reliance Industries will be in focus because the telecom arm Reliance Jio said that it will increase tariffs in the next. Also stated that TRI is likely to initiate a for tariff revisions. Now, according to they're expecting an annual cash flow of around $1.5 billion from the tariff hikes that are expected to come in from Reliance Jio side, while Morgan Stanley said that the price hike by 3 private players has the potential to significantly alleviate the stress in the industry. Central Bank of India would also remain in focus because they have said that the bank has reported divergence in provisioning of rupees 788 crore rupees, and the divergence in gross NPA was close to 2,565 crore rupees. rupees. Shree Cement, because the company launched its QIP issue and the floor price for this issue is set at close to 19,800 rupees per share, which is at a discount of 1% to yesterday's closing. Reliance Capital, because they said that the shareholding in Reliance General Insurance has been transferred to IDBI Trustee Services upon the invocation of pledge shares. IRCTC, because they have signed a concession agreement with Karnataka State Tourism Development Corporation, and the company will be taking over the operations, marketing and day-to-day maintenance of the Golden Chariot train. Lastly, couple of stocks that would remain in focus on the back of bull deals. Firstly, Lemon Tree Hotels, where WF Asian Reconnaissance Fund has acquired nearly 1.4 crore shares, that is 2% stake in the company, while SBI Life Insurance, where CA Emerald Investment, that is Carlyle Group, has sold nearly 3 crore shares, that is 3% stake in the company.
Thanks so much for that, Soumit. Now, let's talk about international news. Just another bit of information. Australia continues to reel under forest fire tornadoes, and there seems to be no relief in sight. Researchers predict that conditions fueling catastrophic bushfires will occur earlier and more often. Take a look. All right, let's talk about some of the stories that you find on the website BloombergQuint.com when you go online and take a look. First up, the government categorically stated that it does not intend to revise its fiscal deficit target of 3.3% of GDP for the current financial year, despite the slowdown in economic growth. Minister of State for Finance Anurag Thakur said as much in a written reply to a question in the Rajya Sabha about whether the government would have to miss its target to counter the economic slowdown. And depositors of the crisis-hit Punjab and Maharashtra Cooperative Bank can approach the Reserve Bank of India appointed administrator for withdrawal of up to 1 lakh rupees in case of medical emergencies. That's what the central bank told the Bombay High Court yesterday. This was RBI's response to petitions filed in the court against restrictions on withdrawals. All right, that's all you need to know going to trade today, but do stay tuned. There's a lot more coming up on Bloomberg Quint.